Our government is at it again as the wheels of ridiculous taxation policies continue to churn. And although these new levels of taxation always promise the middle and lower class safety from its implemented policies, just like everything else concerning the government, it will eventually apply to all, and usually in a quicker manner than originally placed into legislation. Because honestly, why just go after one tax bracket when the government can make money off of them all? And with uncontrolled spending ruling the roost in Congress at a pace to where the national debt interest payments alone will eventually swallow up Medicare and Social Security, the government needs more ways to keep the printing machine going. Well, Mike, that's nice. What are you even talking about? And how does this even apply to housing? Aren't you a real estate agent that's supposed to be talking about, well, real estate things? Well, I most definitely am, and I am. Ever heard of the Unrealized Capital Gains Tax that's aiming to be implemented in 2025? No? Well, then this is a video you'll definitely not want to miss. Let's dive in and evaluate how this could be catastrophic, not only for your investments, but housing as a whole. First off, what is unrealized gains tax? To know this, let's first understand what unrealized gains are. Unrealized gains are increases in the value of an asset that have not been realized, either through the sale or deemed a realization event. They are, simply put, the increase in the valuation of an asset on paper. Pretty self-explanatory, basically. In the case of housing, it's the gain of your value of your asset, which is the property. So the equity growth it can make over time, or in a taxable year regarding what your home appreciates for. What makes it unrealized is that you haven't sold your home. You do not physically possess the gain benefits, the money. You would have to sell your home in order to make the realized gain. Oh my God, Mike, they really want to tax us on profit we don't even physically have in our hands? Yep, they sure do. And it doesn't apply just to housing, it applies to all investments. And just like every time they introduce a new tax, they always sell it that it'll only affect these people or those people. In the case of unrealized capital gains tax, they're trying to place it under the guise of that they're only targeting the ultra rich, and that this tax will not apply to middle or lower classes. However, if history has shown us anything, when it comes to the government, it will eventually work its way to everyone. Let's take a look at federal income tax as an example. When the 16th Amendment was ratified, Congress levied a 1% tax on incomes greater than $3,000 and a 6% tax on incomes above $500,000. These taxes at the time only affected a very small portion of the population. And $3,000 in 1913 is equivalent to about $95,172 in today's money. That's an increase of $92,172 over 111 years. In today's USA, $92,000 would place one in a 22% income tax bracket. In fact, you're at a 10% tax bracket if you make up to $11,000. And this is not the only example over the years. However, for the sake of this video, we're going to use just this one as our example. When federal income tax was originally ratified in 1913, $3,000 a year was considered high income. They only taxed the rich. But that's not the case with the federal income tax anymore, is it? So, given the government's track record, do you really think an unrealized capital gains tax will just stick around to the ultra rich? Oh yeah, Mike? They don't need to make unrealized capital gains tax apply to everyone. Prove it. Okay, fine. Let's look at the current state of the U.S. national debt. The key factor we must look at when we are speaking of the national debt is the net interest we owe on it. And according to fiscaldata.treasury.gov, the net interest we're paying on our national debt is sitting at $893 billion. And if you believe that to be an accurate number, then I have the deed to the Golden Gate Bridge for sale. But for the sake of this video, let's roll with it. This makes up 13% of our total spending. That is third place overall, being under Social Security and Medicare, and is above defense spending. Alarming things also include the fact that our government spending to GDP isn't looking great. Since 2020, the debt to GDP levels have been higher than any other time since the 1940s. In fact, the total federal debt held by the public is projected to be 99% of GDP by the end of 2024. Making things worse is that the printing machine is still in full effect. Also, with the new waves of high-yielding treasuries now in the works, it's just going to mean more interest being served as they mature. This is as yields have hit the highest level in 15 years. In fact, lately, debt servicing posed a sharp increase from 2017 when net interest payments made up closer to 7% of governmental outlays. This is rapidly approaching the situation of the mid-1990s when net interest payments reached over 15% of the fiscal outlays. Being at a time when the overall debt held by the public and percentage of GDP grew from 23% to 48%. So in essence, the combination of large debt and high interest rates means that the federal government's cost of servicing its debt relative to the national income is reaching all-time highs. Interest payments alone on the federal debt represent 3.1% of GDP in 2024. The Congressional Budget Office, or better known as the CBO's June 18, 2024 outlook on government spending in relation to debt servicing forecasted it to exceed in percentage every year from now on from 2025 to 2034, with about 2/3 of the growth in net interest costs forecasted from 2024 to 2023 stemming from expected increases in the average interest rate on federal debt. And the remaining third reflects the expected increase in the amount of the debt itself. So, projections of the interest burden of the debt have dramatically increased over the past 4 years, to a tune of interest payments on debt being more than 16% of the federal spending come 2034. Yikes! So what does all this mean, and what is in store for Americans? The higher interest payments means less government spending is available for defense, social safety and net programs, research, and other important government functions, as interest payments become a higher share of the government outlays. Because of such, the U.S. will have to cut spending on other categories or raise tax revenues to keep deficits from ballooning or even requiring more borrowing. The high levels of debt mean that increases in the interest rate, like those that we've seen over the past 2 years, will have a large impact on our country's budget deficits that could require increases in taxes or reductions in spending. And what do we know by historical track? When has the government ever cut spending? We all know the answer to that question. They haven't. Just look at this graph. What do they do instead? That's right, raise taxes. Although tax rates have been up and down over the years, per administration, it's usually the government's answer to their financial woes. And it's especially the current administration's answer to the problem.
Come on, man.
So for 2024 fiscal year, how much have we spent? How much did we in 2023? Most importantly, what were our tax receipts for 2023? And how about currently? In 2023, our tax receipts amounted to $4.4 trillion. However, in fiscal year 2023, the federal government spent $6.13 trillion. And since the government spent more than it collected, the deficit in 2023 was $1.7 trillion. The majority of this revenue, however, is used to pay for government activities, employee salaries, infrastructure, maintenance, as well as to pay for goods and services to the United States citizens and businesses. And in 2024 so far, the numbers aren't looking that much better, with a $4.49 trillion spending so far and only $3.2 trillion collected. Now, we have beaten that question to death. We know that the current administration is trying to raise taxes in 2025. Will they eventually apply it to all classes? After what I just discussed, you can almost certainly bet on it. So what is their excuse to get this tax in the first place? To introduce Unrealized Capital Gains Tax, amongst others. Essentially, the Biden administration is trying to say that the rich have unfair advantages on the tax front. Number one, being that unrealized gains can be used as collateral to borrow against, thereby making an unrealized gain in the interest of a given piece of property potentially an accession to wealth for a given taxpayer. For example, let's run a scenario. A billionaire holds shares in an electric car manufacturing company. Since acquiring those shares, they have appreciated in value significantly. Let's say from $1 per share to $1,000 per share. Since the nameless billionaire has not sold their shares, they have not realized any gain, so hence currently they owe no tax on their increased net worth. Strike one to the federal government. They can't tax the increase to their wealth. Number two, the aforementioned billionaire could borrow money from the bank using the appreciated stock as collateral, perhaps say to purchase a social media company. Absent some mechanism by which the billionaire can be taxed, they can, at least in theory, defer ever realizing their gains by continually borrowing against their stock rather than selling any of it. Strike two. Again, the federal government can't get to tax it. But now, what really the government is that the billionaire can leverage it to increase their wealth. So according to the government, this is completely unfair. Just imagine a crying baby that can't get their way. And in order to slap down any leverage someone may have to accumulate wealth, they want to ensure that a taxable base exists on wealth accumulation through their investments, even when those investments are not sold. They figure, why let one have a tax shelter, essentially, on their investments, and furthermore, be able to leverage them for wealth growth? Sounds pretty horrible to me. And why? Because by track record, the tax policies filtered down to everyone. So even if you build yourself into a position to do the same thing by success, nope, you're not allowed to do so. The crying baby gets to take your cake and eat it too. Furthermore, they plan to tax unrealized gains on trusts, partnerships, or other non-corporate entities that has not been subject to a recognition event in the previous 90 years. Basically, an investment that has been growing and untaxed for generations. So what does this mean for housing then? Well, first and foremost, the government is trying to sell this by saying it won't affect the middle income or low income brackets. By all of the above and past and current government track records, we know it's just a matter of time until it bleeds to all classes in the US. Should unrealized capital gains tax hit the middle and lower income classes, this means that you'll be taxed on unrealized gains in relation to your equity. Let's put this in perspective by setting the groundwork. The proposed legislation, as it stands, currently wants to impose a 20% tax on the unrealized capital gains of American households worth at least $100 million. Say you didn't have the cap of $100 million and instead was at $300,000. Remember, 1913 and today, things always change. Now, let's say you made $50,000 in equity on your home in 1 year. Don't say that's impossible. Remember the pandemic and housing. At a 20% tax rate, that means you would owe the government $10,000 in taxes for something you didn't even realize. What would that mean for your average everyday homeowner? You guessed it, your home being sold because of delinquency taxes. You couldn't afford the unrealized capital gains taxes. And as we know, if you have any unpaid taxes, the IRS has the right to seize your home through a tax levy. If the IRS seizes your home for unpaid taxes, it uses the money from the sale to cover the cost of seizing and selling the property. Those 80,000 new armed IRS agents are starting to make sense now, aren't they? So in my honest opinion, the current tax limitations being sold to the American public are a joke, but that would be a topic for another time. Either way, although unrealized tax gains have not hit the American people yet, the government is making strides for it and are slating for its implementation by 2025, along with a huge increase in the capital gains tax itself at 44.6% from the 19% where it's currently at, might I add. Just for capital gains, it will be the highest level in capital gains tax since 1922. And in a US economy where the American people are already having a hard time just affording basic living expenses or trying to obtain homeownership, all of this is just a joke. What would happen to US properties if unrealized capital gains tax was implemented and worked its way to the middle and lower classes? You guessed it, little to no homeownership. Who could afford it? Well, you guessed one, BlackRock. You will own nothing and be happy. So by now you're probably saying, Mike, you're a conspiracy theorist, or Mike, none of this will ever come to pass as you say it will. Well, again, I don't have a crystal ball, but based on all of the above, if we get stuck with the current administration for another 4 years, never say never. Well, of course, thank you for taking the time out of your day to watch this video. I do hope that you found that information useful, and let's hope these taxes really never come to fruition. But if they do come, expect this eventually to work its way down to middle, lower income people across the United States, and expect this to affect homeownership should it. So how do we combat this? Again, your vote come November. And let's save our country from predatory taxes like this. And of course, if you have any further questions about this information or other questions in general, say about the Treasure Valley, the greater Boise, Idaho area, or you're looking to buy, sell, or invest right here, please feel free to reach out to me. My contact information can be located in the description below. Also, if you are looking to make that move from out of state right here into the greater Boise, Idaho area, please click in the description below, download my free relocation guide, so that way you're in the know before you decide to make the move. Also, if you did enjoy this content, please hit the subscribe button below, hit the notification bell so that you're constantly in tune with all the videos that I do come up with, and please give me a thumbs up too if you enjoyed this content. It does help out the algorithm. Share it with somebody that might find this information useful. And as always, thank you very much for taking the time out of your day to watch this video. I look forward to the day that we speak. God bless, and I look forward to calling you my neighbor.